I remember the first time I heard about the stock market. I was just sitting at the kitchen table, munching on cereal, when my older cousin walks in and says, "I made money in the market today." And I was like, "Wait, what market? Like the one with fruits and veggies? Are we talking apples or Apple stock?" That one sentence totally got my brain spinning. What even is the stock market? Is it like a secret club for adults in suits who speak in weird money code? Is it risky? Is it only for rich people? And more importantly, can someone like me actually understand it? But here's the truth I found out later. The stock market isn't magic, and it's not just for grown-ups. It's actually just a place where people buy and sell tiny pieces of companies. And once you get the basics, it starts to make a lot of sense. By the end of this video, you'll understand the stock market better than most people do. Let's dive in and make the stock market finally make sense. Imagine this. You and your friends want to build the greatest lemonade stand ever. But there's a problem. It costs $100 to get everything started. You only have $10. You don't have $100 just lying around, right? So here's what you do. You ask 9 of your friends to each pitch in $10. In return, you say, "Hey, since you helped pay for it, you now own a piece of my lemonade stand." Each of you owns 10%. That means if the stand makes money, everyone who invested gets to share the profits. If you make $50, each friend gets $5. Pretty fair, right? Well, that's basically how the stock market works. Instead of lemonade stands, it's real companies like Nike, Netflix, or Nintendo. And instead of asking friends for $10, they sell tiny pieces of their company to the public. These pieces are called stocks or shares. So when you buy a share of a company, you're basically saying, "I believe in what you're doing and I want to own a small piece of it." You're not buying the whole company, just a slice. But that slice can grow in value if the company does well. And that's when people say, "I made money in the market today." Cool, right? Okay, so now that you know what a stock is, let's break it down even more. A stock is basically a tiny slice of a company, not enough to walk into the headquarters and call yourself the boss. And no, sadly, owning Apple stock does not mean they send you a free iPhone. But here's what does happen. If Apple keeps doing well, selling lots of phones, making cool products, and earning more money, then the value of your tiny piece might go up. It's just like your lemonade stand. Remember how 9 friends gave you $10 each to help build it? Now let's say your lemonade stand becomes super popular. Everyone in the neighborhood wants your lemonade. Suddenly, other people are like, "Wait, I want in." And they start offering your original 9 friends $15 or $20 for their $10 shares. So if one of your friends sells their share for $20, they've just made double what they put in. That's how people make money in the stock market, by selling their stock for more than they bought it. Of course, it can go the other way too. If the lemonade gets bad reviews, maybe someone finds a fly in their cup, the value of the shares could go down. But the key idea? When you buy a stock, you're not just spending money. You're investing in something you believe will grow. All right, you might be wondering, where do all these stock trades actually happen? Today, most of it happens online, in a giant digital place called the stock market. Think of it like a massive online store, not for clothes or snacks, but for buying and selling tiny pieces of companies. Instead of saying, "Hey, I want new shoes," you're saying, "Hey, I want 1 share of Disney." And just like that, with a click, you can own part of a company. There are 2 really big stock stores in the US that you should know about: the New York Stock Exchange, or NYSE for short, and the NASDAQ. That's where a lot of tech companies live, like Apple and Microsoft. Now, here's the cool part. People used to imagine the stock market as this wild place with a bunch of adults in suits yelling and waving papers. And yeah, that used to be true in the past. But today, it's way more chill. Most of the buying and selling happens through computers, and it's all digital. And guess what? You don't have to go to Wall Street or wear a tie to be a part of it. If you've got internet and a little money saved, you can invest right from your phone. Okay, but wait a second. Why would a company even want to sell parts of itself? Isn't that, risky? Giving away ownership? At first, it might sound weird, but here's the truth. Companies do it to grow bigger and faster. Let's go back to your lemonade stand. Business is booming. Everyone loves your lemonade. Now you're thinking, what if we had 5 lemonade stands on 5 different streets? We could make way more money. But then you check your piggy bank, and you don't have enough money to buy more stands, signs, or supplies. So what do? Just like before, you sell more shares, tiny pieces of your business, to raise cash. Maybe you offer each new investor a small percent of your lemonade empire. In return, you get the money you need to grow faster. That's exactly what real companies do. They sell shares in the stock market to raise money so they can hire people, build new stores, launch new products, or even go global. They're selling to grow, and if the company grows, your little piece of it might become more valuable too. It's teamwork. People invest, the company grows, and everyone can win. All right, so you own a stock. Cool. But now you're wondering, how do people actually make money with stocks? What's in it for you? Well, there are 2 main ways. Number 1, you buy low, sell high. Let's say you bought a share for $10 and later the company does really well. Now someone else is willing to pay $20 for it. Boom, you just made a $10 profit. That's like buying candy for $1 and selling it to your friend for $2. Sweet, right? Number 2, and this one's kind of cool, is called a dividend. Some companies don't just grow in value, they also share part of their profits with the people who own their stock. Yep, they literally pay you just for owning it. It's like this. Let's say your lemonade stand makes good money this month. You decide to give each of your investors $2 as a thank you for believing in your lemonade dreams. That's a dividend. Not all companies do this, but the ones that do are basically saying, hey, thanks for sticking with us. Here's a little bonus. So to recap, you can sell your stock for more than you paid, or you can get paid just for owning it through dividends. Both ways equals money in your pocket. Now here's the thing nobody should skip when talking about stocks. The stock market is kind of like a roller coaster, and I'm serious. It goes up, it goes down, and sometimes it feels like your stomach drops along with it. Let's say you bought a stock for $10. Some days, you might check and see it's worth $15. Woohoo! But other days, it could dip down to $7. Not cool. Does that mean you lost money? Not unless you sell it at that price. But yeah, it's a little wild. That's why people always say, only invest money you don't need right away. Don't use your lunch money or rent money to buy stocks, because you don't want to be forced to sell just because the price dipped. The good news, over time, and I mean years, not days, the stock market has usually gone up. It's like climbing a mountain. There are bumps, slips, and some scary parts. But if you stay on the ride and you're patient, you usually end up higher than where you started. So yeah, the roller coaster is real. But if you hang on and invest smart, you've got a shot at going up with it. All right, so now you know. Stocks are pieces of companies. The stock market is where people buy and sell them. And smart investing is about learning, being patient, and starting early. If you like this video, hit the like button and tell me, what company would you buy a piece of if you could? Oh, and don't forget to subscribe. We've got more fun money lessons coming up next. Bye-bye.